of the
Our dear Prime Minister, members of Cabinet, members of the diplomatic community, leaders in the private sector, distinguished ladies and gentlemen, good evening. Let me also join in recognizing the coming to age of Gerald Guvaya. Happy birthday, and we wish you continued health and success. You know, listening to Alastair was a pleasure because when we started in 2015 and when I came into office in 2020, it was not as easy to say we are aligned closer and closer. But I think our partnership and what we have built together has really aligned our vision much closer. I recall when we first spoke about building out a world-class technical training center, the appetite wasn't as great as it is now. And there were many who doubted that we had the capability and we had the capacity to do it. We have done that, dusted it, and placed it before the world. When we brought together the consortium for Freedom Hoop, many doubted it. It won't happen. Many of the specialized engineers in our society said it would be a failed project. Done, dusted, and before the world. And I can point to about 15 examples. There is one that we started that we must get done and dusted very quickly. And that is the opportunity in shipping with the supply vessels. I challenge the consortium that we must be able to put together a consortium here in Guyana that can be able to be part of the ecosystem in terms of the supply vessel and other support vessels to the operations. And we have to get that done. And we have to get that done very quickly. So one of the first things in the new year is for us to find the mechanism and the vehicle through which we will and must achieve this. I was speaking to a very good friend out of Guyana, and I told him I have to end the conversation because I'm going to speak at this dinner with a lot of fancy people in the oil and gas sector. And he said to me, when you get there, before you say anything, say production, and the room will light up. I said, you definitely don't know the people of Guyana. I may need to say cash grant. I didn't know I was that correct. It's amazing. I did not realize I can be that correct. So, but really, in today's world, there is hardly any development that can speak to the level of production and increase in production that we can celebrate here. But Alastair said something that triggered me in the right direction. Because sometimes we do not appreciate the medium and long-term vision and how that vision is critical for the achievement of everything that is before us. Now, if you look at the sectors we are pursuing, they are deeply integrated in the energy ecosystem, and look at the economic multiplier that each of these sectors bring to our economy, you'll have an appreciation for that long-term vision. Technology has a multiplier effect of between $2 to $5 on every dollar invested. Energy itself has a multiplier effect of just about $1 of economic value on every dollar invested. Surprising. Transport and logistics, a multiplier effect of $3 to $4 on every dollar invested. Manufacturing, about $1.70 multiplier, economic value on every dollar invested. Agro-processing, between $1.60 and $2. And tourism, between $1.50 to $3. All dollars is in United States currency. That is the multiplier effect, the economic value of every dollar invested in these sectors. And if you look at the strategy we are pursuing, it is in alignment with these very sectors. I said to Alistair that the same speed that we are looking to launch the next FPSO, double that speed must be matched on gas, because we must achieve gas, the second gas project in Berbice, by 2030. And what does this mean? But before I maybe go there, I should step back a bit for us to understand the magnitude of development that is ahead of us, both public and private. If you look at Exxon itself in exploration, you're looking maybe of about $365 million annually. If you look at the whole ecosystem in Wales, with the fertilizer plant, the gas bottling and logistics facility, the marine infrastructure, the manufacturing and industrial zone, and all the other investment that is critical within the next 5 years. In Wales alone, you're talking about investment maybe upward of about $4 billion to build out what Wales will be in 5 years. Just Wales I'm talking about there. The infrastructure and the ecosystem that will be enabled as a result of gas, the first pipeline. That include, of course, the second power plant. Outside of that and what Exxon is doing, we signed this year another development with Qatar Energy, Total, and Petronas. That is an investment in development of about $300 million. They have already paid their signing bonus. Then we have, hopefully before the end of this year, another shallow block that should be signed. And then we have, of course, the Kaieteur block, Ratio Energy, that is supposed to start exploration. So that's another $600-700 million in exploration in the coming year. There is no market. There is no market that has generated this level of confidence and interest in this sector. Let's make no mistake about that. And we have been able to define ourselves and our market in a way that is attractive, yet supportive of the local private sector expansion and development. Attractive to international investment and investors, but still heavily fueled by the involvement of the local private sector. We started this year about 650,000 barrels per day, approximately. We'll end this year at 930,000 barrels per day. That is extraordinary. That's an extraordinary story by itself. Then when you look at the other investment to get gas onshore in Berbice, I'm not going to speak yet about the critical infrastructure that will be built out, because for Berbice, we will have to be operating on three tracks at the same time. One track will be the building out of the investments that will receive the energy or gas. The second track is the pipeline and facility to bring in that gas. And the third track is the port development and infrastructure to support all of the development. If you look at current numbers, the pipeline alone maybe is about upwards of $2 billion investment. Then we have the whole ecosystem that has to be built out. And we're already advancing massive international outreach to secure the investment for the port and the completion of the road link. That may be another investment of upward at least of $1.7 billion US. You're talking about an ecosystem between Wales and Berbice that will generate investment of close to maybe $10 billion US in infrastructure and investment. That is remarkable by any standard. Remarkable by any standard. And if that can't excite you and excite us as a people, then there's a product in CPL called Excite. I don't know what is the nature of the product, but I think Exxon sponsors the CPL team, and he can give us some education as to what is the effect of that product and the nature of the product. I don't know. Prime Minister, maybe Gerald Gavaya can help us. But now, to support all of this, we need infrastructure. And what are the major infrastructure? We're talking about a road expansion and infrastructure loop to Wales, all the way back to Region 4, integrated into Linden, Lethem, Berbice, the new Berbice River Bridge, the new port development, the new airport at Berbice and Lethem, the development of Terminal 2 of the Chedijigan International Airport. These are just a light example, the appetizer of the scale of infrastructure that we have to build out in the next 5 years. In the coming days I will be outlining with great clarity this economic expansion, infrastructure integration, and development trajectory of our country in the next 5 years, for the next 5 years. So I believe tonight in this room, there must be a level of awareness, because this journey that we're on is now getting fired up. It is now getting fired up. But we are not only injecting fuel on this leg of the transformation. We've already launched the EOI for 9 major tourism facilities, ecotourism facilities. We're already working to have major international events hosted here in Guyana in the coming years. We are already working on the digitization and technological transformation of the economy. And I am so pleased with the pace at which the private sector is changing its culture. You know, today I read, or yesterday, a headline where the banking sector is becoming very aggressive internally. One bank challenging persons to move over with them for lower interest on loans, reduced collateral, and expedited processing. And that is because I believe the private sector has unlocked historic nuances that capture the thinking of the private sector in a mode of complaining. To today, a private sector that is innovative, driven, results-focused, and highly motivated. And I congratulate the private sector for that. And this is because of the infusion of wider membership, the infusion of younger membership, and the infusion of clarity of vision of where the country is going. And that is the most important aspect for development. When there is great clarity in the direction in which the country is heading. So, in most countries, they would like to be in the position we are in today. But this does not come without challenge. As policymakers and political leaders, we have the continuous challenge of managing expectation. You in the private sector, you also have the task of managing expectation within your organization and also in your business ecosystem. But whilst we do all of this, we have to ensure that our human capital is being developed and matured at an equivalent pace. And what do I mean? Maturity of the human capital is understanding what is required in level of effort and level of commitment in this phase of our development. Because if our human capital put the same level of effort in advancing themselves, whether it's upskilling themselves and actually optimizing the opportunities available for them to make money, then we will have a very broader growth trajectory. If we have human capital that get accustomed to earning the same level of resources in 4 days that would earn in 2 weeks, and then believe the remainder of the 2 weeks is just to throw back and relax, then we will be, and we must be mature enough to address these issues. If we are not mature enough to address these issues, a culture would creep in that will kill productivity, kill competitiveness, and destroy our ability to be the best we can be. It's not easy. It is not easy. But we have to, as a collective, work towards changing this. The greatest complaint in the private sector today is on human capital management. Every single business complains. Businesses complain they can't find workers. We therefore must understand that our human capital must be developed at the equivalent pace at which the economy requires them to perform. So with that in mind, let us address a few issues. We must not sit back and believe that this story is an easy story or a simplistic story, because we live in a global environment that is ever-changing. We live in an international policy environment that we must constantly evaluate so that we are not caught off guard. This industry is very price sensitive. This industry is very cost sensitive. This industry is very regulatory sensitive. This industry is very technology sensitive. This industry is very politically sensitive. So every element of risk associated with doing business is associated with this industry. And it is not an easy task to manage and balance those risks. For a matter of fact, there are various debates now as to where do we set oil price globally in crafting international budgets and markets. Because one incident in different regions can change the benchmark instantaneously. That is why, as a government and as a people, we have to exercise care and caution in the way we develop our budgets to avoid the pitfall of running up current expenditure to the extent that it becomes difficult to manage in the future. So the idea that you're flush with money is an idea of currency of moment. But as policymakers, as a responsible government, we must make decisions that would enable generations after generations to enjoy the prosperity we're building today. So the resources exist not just to meet needs, but to leapfrog us into the future. And that is what we're doing. We are using this platform to create productive assets, to expand the economic pillars of our country, to invest in building out infrastructure that create jobs, generate income, and expand economic opportunity for people. The easiest route is the opposite of that. And of course, it will be the most popular route. But a government must take the responsible route. And the responsible route is building and finding that balance. But it means something even more profound. We are living in what is described as Guyana's golden era, a time when our nation will be the envy to many, a time when the world is looking to us, not out of curiosity, but out of admiration. And critically, it means that the opportunities for Guyanese farms will multiply. Companies supplying goods and service to the oil and gas sector, logistics, fabrication, construction, technology, catering, training, are already experiencing the demand surge. And that demand will only intensify as each new development comes to production. Tonight, we are not merely acknowledging success. We are celebrating a nation that is rising with purpose, clarity, and unstoppable momentum. The International Energy Agency, in its oil market reports, projects that global oil demand will continue to grow modestly from 2025 to 2030, but at a slowing rate. Demand is expected to rise by less than 1 million barrels per day annually in the mid-2020s, reaching roughly 105.5 million barrels per day by 2030. On the supply side, however, the world is expected to add significantly more capacity than demand requires. Non-OPEC plus producers, including the United States, Brazil, Canada, and new producers, such as Guyana, are forecast to drive the bulk of this growth. So that's the complexity of the market we're operating in. That is why managing the costs and cost centers is so critical. Because this is the real environment. By 2030, global supply capacity could rise to 114 to 115 million barrels per day, well above projected demand, resulting in a persistent supply overhang. Unless large cuts or disruption occur, the market will likely remain comfortably supplied through the decade. No major mismatch in supply and demand is projected. There is a few advantages that we have in terms of quality and break-even benchmarks that put us in a better position in the market. That's our competitive edge. But we have to continue to build out our entire ecosystem so that competitive edge remains intact. This supply-demand imbalance has clear implications for global oil prices, with anticipated production capacity growing faster than consumption. The IEA anticipates downward pressure on prices or at least a ceiling on any sharp upward movements. While geopolitical events, conflicts, or strategic production cuts could cause temporary spikes, the structural trend based on fundamentals is toward a more moderate price environment. So that is why we have to build our ecosystem with an understanding as to what the global environment will be like. In simple terms, the world will have more oil than it needs if all the players operate at the projected playing field. But we know that you have OPEC and you have other players who find ways in managing and balancing supply and demand. The IEA also notes that if prices remain relatively soft, some upstream investment, especially high-cost projects, may slow, but this effect is unlikely to fully counteract the strong supply momentum expected through the late 2020s. Now, what does this mean? You see Saudi Arabia, Qatar, and the whole Middle East pushing towards an agenda of expanding their own utilization of their energy because of the market projections that they're reading. So in their inward diversification plan, part of the model is to create their own demand for energy, building out the hyperscale data centers, major industrial, high consumption, energy consumption infrastructure. Because of some of these market outlook. That is why, as we build out our energy infrastructure, it is very important for us to build an infrastructure that allows us to remain relevant and allows us to build enough capacity in our system itself to take care of consumption. And that is the energy mix and energy integration that is critical for resilience and sustainability. I think I'm going on too long, and I also think that, today I wanted to, this evening, just not to destroy your dinner, but I think it's important we have some of these technical conversations and understand the ecosystem, because sometimes this thing is simplified so much that people lose the understanding as to what it takes to ensure we build a sector that is long-lasting, sustainable, and resilient, to the extent that in Guyana, we say any Tom, Dick, and Harry believe that they're going to run to do it. So the country's rapid production expansion toward conservatively 1.3 million barrels per day by the end of the decade will certainly generate substantial revenue. But in a world of abundant supply, if fully optimized, Guyana's long-term strength will depend not only on how much oil it produces, but how wisely it converts that oil wealth into infrastructure, human capital, energy security, and a diversified economy capable of thriving long after the volatility of the market, if it comes. We must, however, temper our expectations. Yes, our future is glorious. Yes, Guyana stands at the threshold of unprecedented transformation. But even in this moment of promise, we must remain disciplined, prudent, and clear-eyed. Rapid ascent must be matched by responsible stewardship. We cannot afford to overextend ourselves or be swept away by the tide of optimism. Fortunately, the People's Progressive Party Civic Administration has a stellar track record of managing national resources with strategic foresight, like no other political force in our nation's history. The Guyanese economy is not drifting, it is being guided, guarded, and anchored by steady, competent hands. The economy is in safe hands, your hands, our hands, the nation's hands, working together. I think you should applaud your own hands. If you're not confident of your hands, tell me no. At the same time, we are not sitting still. We are building new revenue streams and new engines of wealth creation. From our oil revenues, Guyana is positioning itself to become an energy powerhouse, using affordable power to ignite industry. We are monetizing our forests and biodiversity, turning environmental stewardship into financial strength through ecosystem services. We are modernizing, not abandoning, the traditional sectors that have sustained generations of Guyanese. And above all, we're leaping toward new horizons. Guyana is on track to become the digital dynamo of the Western Hemisphere. We're not only building a digital society, we are laying the foundation for a new family of digital industries, where knowledge drives success. We are also going to launch out the full strategic plan for the building out of the orange economy that will detail the investments we'll make to accelerate the orange economy and to demonstrate how the orange economy is going to be integrated into the rest of the economy. We're deepening our integration with the Caribbean and the rest of the continent through infrastructure, trade, energy interconnections, and shared economic spaces. Guyana is not playing. We're not complacent. Guyana is being set on a course of sustained stability and sustained prosperity. This is the future your children and their children will inherit. A future we are building at breakneck speed, not because we're in a hurry, but because history will not wait for us. And as we chart this extraordinary path forward,